Hello everyone, my name is Marcello Kolax, and today we are going to do something fun. We will have a quick run through all of the major European energy markets. So strap in and enjoy the ride. Okay, so we start with the TTF front month. As you can see, it's good to start zoomed out a little bit. So we are on the weekly chart, and we have been in our downtrend since August 2022. And you can see it now. We are retracing from our uptrend that started in May 2020. So you can see how much we have retraced, and we can apply some FIBs here, and usually the market retraces in line with that. And technical analysis in itself is not really predicting the markets, but it's kind of telling you when to look for the next step, right? So if we move below 23.6%, there's a good chance we move below 38.2%. If we move below that, there's a good chance we move below 50%. And you can see we are now heading for the 61.8% retracement near just above 20. And that is a good normal textbook retracement. However, if we were to remain within our descending channel, then of course we could be heading for even 9.06. I think it's the first time I'm saying this publicly because it's very daring and a little bit outrageous to have this target here. Yeah, but for now, I think heading for the 61.8% near 20 is reasonable as long as we stay within the channel. So last week was a little bit crazy. So let's zoom in on the daily chart and see what's happening here. So we can see that the bulls had a good run. They started in early June, and for the first half of the month, they're driving the price higher to this long-term descending channel that you just saw on the weekly chart. And now we are coming lower. So don't be confused by all the lines here. So this is the FIBs, yeah, the Fibonacci retracement, and they are retracing this up leg. Now we are trying to move lower. You might be wondering, why didn't I put it up here? I mean, I can. There's no problem with that. Just a question of taste. If you have these extreme highs, then maybe they're not really 100% representative of the market, especially if it's just a wick and an intraday move. So if it was more representative of what would be more representative of the market is probably the body here. But of course, it's a question of taste. I'm going with this one here. So we did break below the 23.6% at 35 euros per megawatt hour, which means we are now getting out of noise territory. So the market might be heading for an actual correction. So for now, we would be targeting the 32, below that the 30, and then going into the 28. For now, looking at a few tools, we see that the MACD, which is a trend tool, has been rising in line with what is with June's up leg. Now we are coming off a little bit. You can see, yeah, that is in line with the MACD, and we do see the stochastics. You can use your RSI or CCI if you enjoy that better. We do see that we still have some room to go lower before we even move into oversold territory. So I think 38.2 is almost too easy of a target. So I think we could easily go to the 28.6 euros per megawatt hour, which is a 61.8% retracement, and below that we'll just see. So this here, this little arrow is just let's put it here for now. I wouldn't be surprised, since we are still within this downtrend, to simply just continue the downtrend, maybe even retracing all of it. But that is a little bit leaning myself too far out of the window here. So for now, it's safe if you just go with the 61.8, near 28 euros per megawatt hour, and then we'll see what happens. Okay, so you can see I went into great detail what's happening on the TTF, so we can just blast through the other ones. Okay, let's have a look at the NBP front month. Same thing, I put my FIBs here. You can put it up here if you want to. We are out of noise territory, heading lower. And if we zoom out on the weekly chart, we also see that from this entire uptrend that also started in 2020, now we are tracing just a little bit. We're at the 50%, so there's no reason not to go to 61. We're almost there. I'm sure we could possibly actually test it with the next down leg that we are seeing on the daily chart. Same thing as the TTF. All right, let's do a little bit of European carbon. Let's have a look on the weekly chart. What is happening here? It's a little bit different. So we have been in a really good uptrend since, well, forever. I would say since 2016. Oh my God. So zooming in out on the weekly chart, we have this really strong channel that is really firm. We've got a hit, 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 hit. But now, since January 2022, we just can't make it above the, let's say, 100 um, level. I don't know, it is more of a psychological level. I'm sure if you watch TV, you don't have your volume at 18, probably you put it at 20. Same thing with the markets. So probably we are, for now, still going to struggle to move above or towards again the 100. So zooming in, you can see we have a tiny channel forming here. So what is that? That is what has been happening since March 2023, and you can see this down channel is not as developed as we see on the TTF or NBP, but it is the same direction. We have now hit the upper end. We did have a nice spinning top. We do have another good bearish candle. We do see that the stochastics did give a bearish signal, and we also, would be in line with a downtrend. However, we do see that the MACD, momentum and the trend tool, is still heading higher, and it doesn't look as toppy as on the TTF or NBP. So I'm a little bit worried that this might be really just so it could be just the start of an uptrend, or we're actually continuing within the downtrend and just simply continue to swing lower. Once again, TA is not a crystal ball. We're just looking at what the market is already doing, and we just look for the most probable direction. It also helps you to put your stops on, right, for better trade management. Also, a little bit, just a little tip here. So you can see we are not quite clear out of well, very choppy territory. So don't use the 200-day moving average as a sort of like trigger, because you would be thrown in and out every other week. Yeah. So don't take the 200 as a bearish medium-term trigger for now. Yeah. So be careful with that. Here once again, I put on the FIBs. This time at the complete peak because it's not that crazy, and goes all the way down to this trough here. So once again, once we are out of noise territory below, what is this, 90, then there's a chance to move to 88, and there's a chance to just test the 200-day EMA again. Yeah, and always just, I mean, you can. Of course, this is not trading advice, but one option would be like to pyramid your trades. Yeah, if you get more and more certain. Once again, not trading advice. Don't listen to what I'm saying. Let's do a little bit of call. Okay, so calls has been moving quite predictably. Let's see what the weekly chart is doing. So zoomed out, as you can see, we have again since May 2020 we had this ginormous up leg. Now we hit a peak in March 2022, and we've been declining ever since. I put in my FIBs because we are retracing this up leg. Yeah, so this is the up leg, and now we're retracing it. Why did I put a FIB here? There is an argument, especially if you look at a textbook, to put it here because it's like the latest peak before the market actually declines. Question of taste. This isn't more right than this. It's just however you feel today. Yeah. So you can see we have clearly broken below the 200-week EMA, so there's a chance for the market to move lower. We are at the 61.8% now, and the daily chart shows that we are probably heading lower. So I think coal has a chance to move to the 68 dollars per ton, which is the 78.6% FIB retracement. But let's see what the daily chart is actually doing. Okay, so you can see we've got our orange channel still, as we saw it from the weekly chart. We are now still heading lower, and we could draw in a little bit of a wonky blue channel, so a channel within a channel, and this seems to be holding quite well, at least since January 2023, so the entire year so far. So this gets a little bit messy. Apologies. I'll just remove this. So you can see now here again, this is the top of the FIB, yeah, the 0%. And if we go all the way down here, that would be 100% retracement. We would be retracing all of this. And this is the idea, yeah? So as you can see, we are not even out of noise territory. So be careful. But below 110.41, there is a chance for the market to actually decline in line with what the rest of the market is doing. I wouldn't see that the $96, the 100, yeah, we could possibly move to there because as you can see, I'm just maximizing the stochastics. We already got a bearish signal. We are not even out of overbought territory, but we are tending towards to move a little bit lower. So there's a lot of room left for the market to move lower without even going into oversold territory. Once again, the only worrying thing is, as on all the other charts, is that the MACD, our trend momentum tool, is still heading higher, and there's no end to it. So above zero means we are in bullish territory. So what's happening? We are in this overall. The graphics show us we are in an overall downtrend, but the tools show us that we are moving higher. Well, here's the thing: the tools, they're there to confirm what's on the chart, so they are a confirmation tool. They're not the only thing you look at. And having the evidence that's displayed to us, I would say it's a safe bet to wait until. It sounds like trade advice. This is not trade advice. It would be a safe bet to move below 23.6% to get out of noise territory, yeah, to actually make use out of the potential down leg. And let's have a look at Brent. Brent is quite boring. So we are on the weekly chart again. I'm zooming out. And here you can see the whole uptrend started in 2020. We peaked somewhere in Feb 2022, and we have been declining ever since. We just moved out of noise territory, as you can see. So we're still kind of there. The market definitely struggles to move below the 200-week exponential moving average. So I think this whole entire area is a little bit sticky in like the 80s, what we have here. So let's zoom in. We really are in a sideways trend. The sideways trend is getting narrower and narrower. So first we didn't make new peaks above, what is this, like 88, and then somehow the range a little bit lowered. Now we are moving into this tiny range here. So it's all a little bit boring. Last week, if you're following me on LinkedIn, you would have seen that I was pretty much, so when you had this red candle, I was actually ready for the market to move lower, and of course stop placement never on the line, probably a little bit below that. You can use the ATR to be more precise. So when you had this red candle last week, I genuinely thought there's a good chance to move lower, but once again, you don't enter. Ideally, you don't enter anything that's unconfirmed. And I was proven wrong. So we did move higher again. So now we are reassessing or the situation. So we are still in this sideways trend. What is the MACD doing? It's moving also sideways, because in a sideways trend, you don't really want to look at trend or momentum tools that will just give you false signals. In a sideways trend, it's easier to look at oscillators, so RSI, CCI, stochastics, yeah. And we see we are not even overbought territory, but we are already reaching the upper end. So I'm a little bit worried. So here, I'm not making any sort of call or anything like that. I would just wait it out, yeah. A clear break above this resistance zone for the near-term players could probably easily lead to a test of the 200-day EMA, which is currently near 83. If this whole area is rejected, then probably we'll just continue swinging within the narrow range. All right, cool. That's it. Thank you very much, everyone. That was my outlook for the week starting the 19th of June. You have a great week ahead. Once again, no guarantees, just educated guesses. Be safe out there. Thank you, and bye-bye.